What's up, YouTube? It's your boy Richard back again. And in this video, I just wanted to break down this banger trade that I took on Wednesday. This trade, I roughly made around $1,500 on both my accounts on Robinhood and Webull combined. And I just wanted to break down the process of finding trades like these and how to find trades like these on your own terms. So this trade was an $8 move in options. I trade options. And yeah, let's get into it. So I'm gonna delete these and just show you the breakdown of how I found these trades. So first off, let's say I was looking at here, right? So first off, where I start is I start solely on the 1 hour. And the premise of my strategy is essentially support and resistance, just advanced support and resistance. So I don't do anything special. So the first thing I did was I looked left, right, to see where the key levels on my charts were. So what key levels are pretty much where both buyers and sellers have decided that they will do transactions in this area. That's why you see in options, you will see certain areas, especially whole number areas or incremental areas where it's like the number is like in increments of like 5 and 10, let's say like 65, 70, 75, increments like that. You will see that price has routinely come into that area and like bounced off that area multiple times. So I've saw that my key levels in this area, this was the most recent price action from where we were after we broke this level. So I had a key level around right here. I have a key level around right here. And this is the top of the entire market structure. So this whole leg, this is the top. So I have a key level around right here, right? And also one thing to help with key levels is these horizontal lines. If you notice, I don't have any vertical lines on my chart. I have his horizontal lines because that helps with finding these key levels. It helps you like get your entries, because one tidbit that I found out about options, if you're trading short term on the stock market, is that stocks really do like to reject off of whole number or half number or like 50-cent marks. So if you have an entry and it lines up with the whole number or it lines up with like the 50-cent like share price of a stock, that's a very good entry. So I drew out these key levels because these are areas where the market has rejected from. So if we look at 56, market came up here, rejected, came back, rejected, came back up here, rejected, came back up here, rejected, came up around this area and rejected. So what that tells me is that, okay, price is likely to come back here in the future and reject off of this area. And that's exactly what it did in this trade. So if we fast forward to present day, right, I have my zone still here, right? I didn't take this trade. And then, so let's go down on the 15 minutes. So the 15 minute is the time frame that I do 90% of my analysis on. That is where I find out what trend we're in. So that's going to dictate what kind of trades I'm looking for. So if we're in an uptrend, that means buyers are in control. So if buyers are in control, buyers are going to want to take price higher, right? So when price move forward, I didn't take this trade because it never gave me my entry, but price, right, on Wednesday morning, price broke above my key level at 56 right here that I drew earlier. So what that told me is, okay, buyers are in control. And that doesn't mean immediately to start looking for buys like as soon as buyers are in control, like, oh, let me buy. No, what you want to do is you want to wait for a pullback, because if whatever like party is in control, whether buyers or sellers, they're going to want to be efficient with their entries. They want to save as much money as possible. So they're going to wait for price to come down a little bit and then take the price to the next area of interest, the next key level, to where they could start trimming off some of their positions. And so what that was, so we see prices making a higher high and a higher low and a higher high and broke this key level. So what that tells me is that, okay, price is likely going to come back to this 56 level, because that's where buyers would more than likely want to step in, because like I said earlier, key levels are areas where both buyers and sellers have decided to do transactions. So once we broke here, I go on the 5 minute and I wait for my entry. So my entry is going to be 56 exactly, because like I said earlier, we want to start entering on whole numbers. So my entry time frame is the 5 minute time frame. So I will wait for price to come back down, and boom, price came down to 56. So my stop loss is going to be below this key level, and give it a little breathing room just in case, because not all the time you will get sniper entries like this. Like price will literally like come close to your stop loss and then go up in your favor if the trade is a winning trade. So now that I'm entered in the trade right now, I think about conceptually, okay, where are buyers more than likely going to want to trim their positions? Because price doesn't go in one direction forever. It has to like have a healthy balance of both buying and selling. That's what a free market is. A free market is a healthy balance of both buyers and sellers. That's how commerce is done. You have to understand that in these stocks, in these stocks, you need a balance of both people buying and selling. Because if you're buying and you can't sell, you can't, like, that money is not yours. You know what I'm saying? If you have it in an open trade, that money is not yours yet. And if price is selling, you need people to start buying. You know what I mean? That's just what supply and demand is. That's what transactions are. So I'm like, okay, where is price likely going to run into so that buyers can start exiting their positions? So originally, I thought it was 60 because you have this kind of like support and resistance here. However, this support and resistance didn't really line up here. This was just like in the middle of all price action. So I was like, okay, more than likely or not, price is going to reach up into this level, and that's where I'll exit. So on the 5 minute, let's go back to present day. I targeted 64, right, for an $8 move. And I managed my risk, and I was just in it. And about 3 hours later, it hit take profit, netting me roughly around $1,500 on both of my accounts combined. So that's essentially why this trade worked. It's because we had a couple things happen. One, we had our key levels on our screen, so we decided where our key levels are. Two, price. Previously, the day before, it was between these key levels, and then it opened above aggressively, right? It opened above aggressively above this 56 key level. So that signaled to me that my entry was going to be at this key level 56. And because buyers are in control and we're trending upwards, that means the probability of buyers taking price higher is higher than price going down. So that was like, when you're trading, you have to think in terms of probabilities. So the probability of price going higher was like greater than the probability of price going lower. So if that's the case, where would I like to see buyers take some of their profit? It was 64. So that's essentially how I broke down this trade and made $1,500 in 3 hours on Wednesday. So yeah, if you want to see some more price breakdowns, subscribe. And also, if you want to see like a lot of the mistakes that I overcame and a lot of reasons why traders are still unprofitable to this date, check out my last video. But until then, I'll see you in the next one.